Hello everyone, this is Alphabet from Invartis Consulting and I'm bringing to you the latest buy-side buzz. So let's dive right into what happened in the world of buy-side in January 2022. Special purpose acquisition companies, also known as SPACs, make their debut in Singapore. After the SPACs US craze, the SGX hosted 3 new SPACs in January 2022. First one of them being Vertex Technology Acquisition Corp, which is financed by Vertex Holdings, a subsidiary of Temasek, Singapore's sovereign wealth fund. The SGX provided rules for SPACs late last year, requiring a minimum capitalization of almost $111 million. SPACs are known to be easier for startups, avoiding the complexities of an IPO. And it is expected that Singapore could have almost 12 SPACs in the next 12 to 18 months, primarily targeting fintech, tech, and consumer sectors. However, given SPACs have fizzled out in the US amidst regulatory scrutiny and poor returns, it is yet to be seen how will SPACs perform in Singapore. UBS has inked a deal to acquire Wealthfront, one of the pioneer robo-advisors, for an all-cash deal of $1.4 billion. This is UBS's first pure-play robo-advisor and part of its overall digital strategy, which is focused on targeting younger investors as well as fueling growth in the United States. Wealthfront has an AUM of almost $27 billion and approximately 470,000 clients, which UBS will acquire. Wealthfront clients are mostly millennials and generational Z investors, which is the client segment UBS and other wirehouses want to focus on. So the EU Green Taxonomy saga was pretty interesting the whole of last month and finally published. The EU has decided to include gas and nuclear energy in the EU Green Taxonomy, which is the rule book which defines what sort of private investments in the energy sector would qualify as green and sustainable. This has met for severe criticism from climate experts, scientists, and even a lot of countries in the EU remain divided on this. However, the EU Commission has maintained that this is consistent and compatible with the EU's climate and environmental objectives, which require them to be climate neutral by 2050 and reduce emissions by 55% by 2030, and that they will lay down stringent conditions to use gas and nuclear energy. Let's see how that pans out. Your own personalized index fund. What if your fund allowed you to pick and mix stock holdings just as you would burrito fillets at Chipotle? Direct index funds, which allow for such customization, may be the next big trend for retail investors. This is evidenced by acquisitions of direct indexing firms like Aprio and Eaton Vance by BlackRock and Morgan Stanley respectively. Technology, fractional shares, and low-cost trading may make rolling out such funds to the masses possible and not just to wealthy investors. This may be a viable option for sustainability-minded investors especially, who can design their own fund based on their preferences. However, a lot would depend on how these funds would be priced as compared to the very low-cost passive funds available in the market today. On the regulatory front, China's regulator has issued draft rules to further strengthen supervision of the country's major money market funds. This step could further rein in and Group Bao, country's most popular and largest money market fund. Major funds have been defined as those with net assets greater than $31.5 billion approximately, or with over 50 million investors. For context, Bao had $764 billion in net assets last September. These rules are intended to enhance fund managers' risk management abilities, enhance the product resilience, and ensure liquidity and safety of investors. And one more thing, if you've not already done so, the annual letter by BlackRock's Larry Fink may make for an interesting read. The letter in part seems to be a response to critics and institutions who plan to veer away from using BlackRock, given BlackRock's position on sustainability, which may harm those economies which are dependent on fossil fuels. Larry Fink said that we focus on sustainability not because we're environmentalists, but because we're capitalists and fiduciaries to our clients. So he aligned stakeholder capitalism to capitalism, and he also made a statement that blanket divestment from fossil fuels is not on the BlackRock agenda. Have a read and let us know what you think. And that's it for this time, folks. Thanks a lot for listening and watching. And if you'd like to read more about any of these stories, the links are in the comment box below. See you next time. Until then, have a good day and a good week ahead.